Hello, traders. It's Wednesday, the 11th of September, 2019. It's 8:01 a.m. Chicago time. Thanks for joining me today on episode number 1593. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, a risk on after a just a ripping push up on the close yesterday in the U.S. indices. Um, The market has several reasons to bounce up. The DAX is leading again today. The DAX was stronger yesterday as well, up 98.5 points or 0.8%. Crude oil pushing a little bit higher after dropping yesterday on news that Bolton, the security advisor to the President of the United States, was fired. Although it sounds like it was a resignation, but so they're saying he was fired. I don't know which, don't care. In either case, crude came off a little bit, but also, projections for oil demand also came in a little softer. I think it was the EIA who released that, and I think that has a lot more to do with it than the political news. But crude is taking a bounce, a little bit of a bounce today. The bonds are weakest. The bonds are off 27 ticks. The euro, the yen, the 10 years, and the pound are all off. The Bund is actually up 2 ticks, and gold is up 40 cents, trading around 1,500 at. They're currently at $1,499.50. Gold has had quite a run up in the last year, and pulling back a little bit now from about 1560. So overall, risk on, we're back above the 2980 area. Some interesting structural things to talk about today. I'm going to try to keep this to 15 minutes. It's tough. The market has been moving around a fair amount. Um, in terms of what's ahead, the biggest part of the news has to do with the softening of China. China is going to exempt many U.S. products from further tariffs, and China is promising to buy U.S. agricultural products. We've seen that before. So it's making moves. China's making good faith moves um, to negotiate, to help the negotiation with the U.S. The market's liking that, and it is popping higher. And so this is what things look like. One more thing, here in the United States, we commemorate 9/11 today. 18 years ago, this day, we saw something that's unprecedented in the world. Fully loaded commercial planes were hijacked and flown into the World Trade Center and the Pentagon, a devastating day for Americans and I think for humanity overall. We want to remember the men who ran into these buildings while they were crumbling to save as many lives as possible, many of whom have been sick and are still surviving today. So um, just want to remember that that happened. Many tragedies in the world, but today is 9/11. Anyway, let's move on to what's expected in the calendar today. We did get US PPI this morning, came in at 0.1. Consensus was 0%. We get wholesale inventories, also a low tier release. And then we're going to look for crude oil inventories from the EIA today, expecting a draw 2.686 million. The last draw was about 4.7 million, and that'll be it for today. Pretty light day in terms of scheduled events, and overall, there's a lot to anticipate for tomorrow. Tomorrow has got some really important numbers. German inflation rate. We get the ECB rate decision. We get U.S. inflation as well. So keep an eye out for that. There are more releases tomorrow that are scheduled. And as always, in this environment, it's really about the news. Let's take a look at what was expected yesterday versus what we got. Yesterday, we were opening at the low edge of uh, Monday's profile and Monday's range. The primary expectation is it's likely to push up slightly responsive before we sell off and start filling the gap. Expected the market to start taking a run into the gap. It had been balancing. Why did I expect it? Well, you can watch yesterday's video. All the videos I make for the Trader Bites are there in on the channel on my YouTube channel. I don't erase them. I don't edit them. They just sit there. Um, but really, if you look at Monday's action, we open above 2 days balance and we cross the entire the range of Friday to close weaker on Monday, higher and higher and higher points of control, but closing weaker. The expectation is that given the action, given the selling action against that 29.90, there was quite a bit of liquidity up there, and there still is. I'll show you that in a minute. For those of you who have been following the 29.90 saga, there's been a fair amount of activity up there, especially on Monday. Well, you know, the market has explored above those 2 days of balance, and the expectation is it's likely now to check below because that's what the market does. It's checks prices on both ends and finds value somewhere in between, consensus somewhere in between. We measure that consensus through the volume profile. That's what the volume profile is good for. Anyway, the primary expectation is for the gap zone left behind from last Thursday to start to get filled. But what the market actually did is both scenarios, a lot of it driven by news. So we open up. Remember, I looked for, again, I'll show you this. This is kind of interesting. I looked for to be responsive and to turn where at 29.75, right? This is the stock zone here, 29.75 to push lower. And the first push down is expected to be around 65 or so. The second area to monitor is about 58. Okay, so remember, 75, 65, and 58. And what we have is a market that pushes to 58, right? Doesn't give any respect to 65, pushes to 58, comes off, pushes to 58, bounces back up, goes to 75. So now this is almost like scenario one in play, and then respects this 65 area and then pushes back to the 80. And if you recall, I talked about the 80 quite a bit the day before. And it's an important area up here. It's got a stock zone on it, and we end up pushing back into the balance for the last several days. So if I extend this profile, this composite, if I extend this forward, you'll see that the market closed right at the point of control, coming right back to balance. So yesterday we moved and we tested below. So we've tested above on Monday, we tested below on Tuesday, we finished right on the point of control, right in the middle of this yellow profile. This is how the auction works. I know everybody out there, a lot of people out there talk about how the market will reward the fewest people, hurt the most people, and all of that. And I believe that on the surface, it might look that way, but the market's job is to find equilibrium. And equilibrium is described by how much volume is being traded. It's not equilibrium if nobody wants to trade there. It's equilibrium when people think the price is fair for the inputs that they have, whatever those inputs are. Macro, technical, pure macro, pure technical, blend, doesn't matter. We just see that there's a lot of volume there and it comes back to the middle. And here we are today trading right in that area. We're at 29.81. We're just above the 29.80, this key area here that we put in on Monday. And the point of control at 29.79. And here we are around this area, the overnight point of control 29.82. right in here. And it's just an interesting area to be. We are smack dab back in balance. We've tested above, boom. We've tested below, kaplow. We pushed not quite to the middle of this gap zone. The middle of the gap zone is down here at 51.75. We just breached a little bit into the gap zone, just a little a soupçon of a test, like maybe 7 points, and we've pulled back into the middle, expecting today to consolidate. Even though we look like we're very bullish, I believe, and you can quote me on this. I believe that many people are going to get caught looking for a bullish breakout to continue, and I expect today, given these metrics, and this is the advantage we get, the edge we get with volume profiling. Um, I expect that people are going to get caught looking for a continuation of yesterday's close, and it was a relatively strong close. I believe that they're going to get caught thinking that there's likely to be a continuation when actually we are smack dab in the middle of balance. Now, I may be wrong. I have an equal opportunity of being wrong as everybody else, including every participant here in the audience listening to this. We all have the same chance of being right or wrong. It's 50-50 on whatever call we make. It doesn't matter what it is. And so here we are in the middle, and I expect us to chop around in here. I expect us to test up into 29.87, potentially test it down into 29.71 again, and just hold steady in the middle. I don't expect to break out. This with a caveat and a disclaimer that there may be news, that could change that. Now, I can't account for news. I can't stop the tweeter in chief to tweet. But overall, this is how things are laid up for us in terms of a technical look, and my technical look is built on the auction, are built on the auction and how the market auctions, and I'm measuring that with a volume profile. So that's that. That's my story. I'm sticking to it. But warning to those who are looking to just, capitalize on that big run into the close yesterday, really not expecting a continuation on it. The overnight sessions shows okay volume, about twice what we would consider to be historically normal. But we haven't had the historically normal for a while. But overall, pretty balanced profile, quite Gaussian. I don't see any big peak there or anything like that. No kurtosis. The mid VWAP are below us. The point of control are above us, and it's holding steady above the prior day's high. I do expect a reversion here. We did have an excess. If you look at this profile at the top, if you look at this volume right here, this looks like an excess. This action that happened at 29.87 based on some news event probably is an excess high, and the market has pulled back from there. I expect that the exploration is likely to continue lower on the open. But we'll see. Again, that's a 50-50 thing. Everything is. It's all, partly random, at least for the next outcome is very random. But, we do have some good structures below, good structures above, things, good reference points to trade off of. And that's what we've got for today. Okay. Let's take a quick look at CT Bookmap. You can get this, you can trial this at ctbookmap.pro, of course. Here's what the overnight session looks like. We closed very strong yesterday. We closed, we had a very strong close. You could see that the delta was pushed quite well. And then we volume dries off. We expect this overnight, and there's the spike. There's the spike that took place to 87. It actually created a couple of collisions. There were some offers here at 82 and again at 85, and those were lifted. You can see a collision dot right there and a collision dot right there, and you can see that volume coming right back. That volume coming right back in there. Okay, so this is kind of putting a lid on things at 85 for now, and we'll see how that plays out. If we look more closely at how the landscape is set up, and you'll see again, this is the 2971. Remember, I said the market is likely to test up into the overnight high, the 87 or so, and it's likely to test down into 71, but mostly I expect it to trade in the middle. In general, I'm looking for an outside in type of trading environment today, looking for excesses to trade against. And you better believe I'm going to use the liquidity shown here on the heat map to be able to find those spots and lean against them in addition to price action structures. But in the middle, look at this thing. It's just got nothing, man. It's dark. There isn't anything outstanding, and we still have that size at 29.90. This size at 29.90 goes way back for days and days and days and days. We see it every day, every morning. I come in here, I load the data, uh, and I see that it's just been sitting there quite firm. I'm not sure about the size at 91, but I know the 90's been in play for a while. Looks like some OTF long-termer is working a hedge or working a position or whatever. I don't know what they're doing, but they want to play in that area. So that's what we've got. Let's take a look at what we're expected to see today. I'm going to phase out this process of talking about scenarios in the depth that I am. I believe that they cause more confusion than they help. And it just, it's like, why is this guy predicting what the market is going to do? It's not a prediction. And it's just, I've gone through it so many times that I still get emails about it. It just doesn't make sense. So it is better for me to talk about areas of significance where the market might turn than to talk about how or what the expected path is likely to be. It helps me to generate the expected path because it helps me hold on to those trades once they take place. We did close with a weakish high yesterday, but this morning, the key areas to monitor right here at 2980. I don't expect this to hold on a test at the open. At the open, the initial participants are likely to be in a higher time frame. They don't really care. They don't really care about some level that we have on here that's generated intraday. So I don't lean very much on these stock zones at the very open unless we start to get extended. But the key areas to pay attention to is 2980 later in the session, 2987 above, and then we're looking at 2971 again as another key area, reaction area if the market pulls back. We may see something at the 75 again, but not a huge expectation there. I'd consider this to be a weaker or lower tier stock zone. But overall, if the market drops early, I expect it to be to find the buyer at some point and push back up. I'm looking for targets around 84.50, the naked point of control right here from this day. And so whichever way it goes, I'm leaning against these key areas, these stock zones, and then just as you're doing your scenarios, remember what key areas are matter to the market, to the participants. Here I'll give you a really big nugget here. We talked about it just yesterday in our trade talk, Convergent, but I'll throw it out there for you guys. Our job at the very beginning is to determine which side has the bigger push, is taking the bigger push. That's one. Two, what time frame is in action? The market's made up of many different time frame players, okay? So we want to see if it's respecting day time frame levels. Is it, things like yesterday's IB, yesterday's mid, the overnight VWAP, the full session mid, that sort of stuff. If it does, then we can more confidently trade those levels against our stock zones or whatever. Um, and then once we determine what that is, and a higher time frame is the micro composite. Look for multi-day things that are obvious on a multi-day basis, highs, lows, multi-day highs, swing lows. If those get respected, then we know that the day levels are more precarious trade, and we have to be careful there. But once the market does its thing, we've already pre-identified what areas we want to participate in. I call those stock zones. It's a trademarked word to convergent trading. And then I bring in the statistics. I look at, okay, what kind of range am I expecting? What has been breached? What stats are still in play? What stats are not? Overnight stat, point of control stat, IB stat, double IB stat, opening swing stat, bands for range bands, things like that. The statistics for the high of the day, when does that usually happen? The statistics for neutral days versus trend days versus normal days, all that stuff comes into effect. And then we hold on to see what it wants to do next. So let's try it this way and see. And then I'll probably, do my scenarios anyway. But let's try it this way and let you fill the gaps for yourselves so that there isn't a dependency between us. Well, I'm happy to hear your feedback here on the chat window. If you're on Periscope, you can hit me up on twitter.com/futurestrader71, and we'll go from there. I'm happy to pivot and do whatever's needed to achieve my mission and vision for what I've been working on for the last 11 or so years. Good luck. Take care.